Beware when shorting stocks by www.profitableinvestingtips.com. Over the course of the longest bull market in history, contrarian investors have again and again predicted doom and gloom and been burned again and again. As noted in the movie The Big Short, there are times when shorting a stock can be immensely profitable. But choosing what to short and timing of when to do it are keys to making money with this approach. Unfortunately for contrarian investors, in the last year the most shorted stocks went up as a group more than 20%. So you should beware of shorting stocks. But many shorts in the last year were successful. How can you profitably pick and choose? Beware when shorting stocks. MarketWatch visited the issue of Wall Street's most shorted stocks in a recent article. With U.S. stocks up around 25% so far this year, it would appear to have been a tough year for short sellers. But a breakdown of the most shorted large-cap stocks indicates Wall Street's nabobs of negativity have enjoyed a somewhat more upbeat story. In a Tuesday note, analysts at Bespoke Investment Group observed that Russell 1000 RUI plus 0.24% stocks with more than 20% of their float sold short have seen total returns of 14.81% so far in 2019. That's a solid gain, though it lags the returns of more than 25% posted by large cap indexes, including the S&P 500 SPX plus 0.22% over the same time. That means shorts have done okay on a relative basis, the analysis wrote. The least shorted stocks in the index are up 31%, so there was some predictive value to looking at what was being shorted and what wasn't as a group. But within the shorted group, there were some big losers. Here are some examples from the last of stocks that had more than 20% of their float shorted. U.S. Steel, minus 22.68%. Range Resources Corp., minus 59.50%. Nordstrom Inc., minus 15.25%. Macy's Inc., minus 44.72%. Wayfair Inc., minus 4.65%. Bluebird Bio Inc., minus 24.65%. Macerich, minus 32.97%. AMC Networks Inc., minus 29.06%. 2U Inc., minus 51.61%. Grubhub Inc., minus 44.15%. Sarepta Therapeutics, minus 0.68%. World Wrestling Entertainment, minus 18.93%. Timing when picking stocks to short. Although we repeatedly remind investors that fundamental analysis and appraisal of intrinsic stock value are essential for investing in stocks, that approach is best used for long-term investing. The issue when shorting a stock is that you are borrowing money to buy the stock, with the exception that you can, rather quickly, buy it back at a much lower price. A good example is Match Group, which was the most heavily shorted stock in this list at 59% of its float. The stock is up 61.37% on the year, but it is down 19% in the last 3 months and 4% in the last month. If you shorted this stock at the beginning of 2019, you got burned, and if you shorted it 3 months ago, you are riding high. In short, you need to stay abreast of market sentiment and short-term factors when shorting stocks, because you cannot afford to hold on to a short and constantly pay interest for years and years while you wait for your predictions to work out. How to pick stocks to short. Those who are successful at shorting stocks track their target stocks and are fully aware of the intrinsic value of these investments. Then they decide what to look for, the trigger that will make them short the stock. Although shorting stocks can be vastly more profitable than investing in them long term, timing and appreciation of market sentiment are crucial factors for success. For more insights and useful information about investments and investing, visit www.profitableinvestingtips.com.